Hello everyone, welcome back to Current Economy and Investment Insights. Today is March 29, 2021. I'm Ron Jankowski with Channel 4 and Payless Heights, and of course our co-host is Paul Munico with the Ameriprise, and Paul is in his studio at his home, and he's going to give us an update as to what took place in the marketplace and any other news. Paul, take it away.
Thanks, Ron. Today I wanted to talk about what is going on in the Suez Canal and how it is having an impact on the stock market. So let's dive into the data. Just on March 25th this year, while sailing from China to Rotterdam, the massive container ship Ever Given was in Egypt's Suez Canal when smacked by a sandstorm sporting 31-mile-an-hour gusts of winds. The container ship lost visibility and was pushed askew and ran aground. After working with both sides of the channel, Ever Given was stuck, blocking all Suez Canal traffic. The Ever Given weighs 200,000 metric tons and is 1,300 feet or 400 meters long. Now, it was built in 2018, and this Golden class container ship may have been carrying 10,000 40-foot shipping containers. The vessel's owner is based in Japan, and it's operated by an Evergreen Marine Corp out of Taiwan. The Golden class includes 11 container ships built for Evergreen Marine with a maximum theoretical capacity of approximately 20,388 20-foot equivalent units. Last week, 8 local tugboats, a dredger, and a small fleet of construction vehicles failed to free the vessel. Now, Evergreen Marine should begin efforts to lighten the ship and refloat it this week. First, we expect them to empty ballast tanks and offload fuel. Despite the risk that the ship could be destabilized and flounder, if making the ship lighter fails, the next option will be much more work. Scavengers will have to unload the ship's cargo, but that could prove difficult without large dockside container cranes typically found at the containers terminals and no existing infrastructure to get them there. The next strategy will require pulling crane barges alongside and removing containers one at a time. Now, 2 private companies, a Netherlands-based SMIT and Japan-based Nippon Savage Service Company, they were hired by Evergreen Marine Friday to try and refloat the ship. When markets closed on Friday, more than 100 ships were already backed up in the Gulf of the Suez and the Red Sea awaiting their return to sail through the Suez Canal, which averages around 52 ships per day. By Wednesday, we can expect as many as 360 ships waiting to pass through the Suez Canal. Unless ships cancel their voyages or reroute through the South Africa's Cape of Good Hope's treacherous waters, that's going to add 10 to 14 days to the voyage. Once the Suez Canal is reopened, every Western European port could be in the path of a tsunami of ships and cargo. Unfortunately, maritime containers traveling from Asia to Europe ports where they're already congested and facing 4-day offload delays. When the awaiting ships arrive in Europe, wait times could go from days to weeks, if not even months. Asian manufacturers and resource producers may have to cancel future sailings to Europe as they try to adjust the delays. We should expect increased wait times as they wait for berths to free up, even if some vessels choose to sail around the blockage. Now, shipping and air freight freight rates have already moved higher. European prices should rise on shortages and higher transportation costs. If the Suez Canal remains closed beyond Wednesday, Asian goods meant for U.S. markets could be diverted to Europe, causing domestic prices to also rise. If the Suez Canal is closed long enough, global logistic chains could be broken. It all depends on how long it takes to reopen that channel. So what started out as just a ship blocking the Suez Canal, as heard by my report, has gotten worse and worse, and hopefully they can get that ship freed this week. If not, as I stated, costs globally could potentially be on the rise for goods. So it's something that we need to keep a close eye on. I know the market is watching, and we'll hope for the best in the Suez Canal. Thanks, Ron.
And we're back from Paul. Thank you, Paul, for that update. Ameriprise that also gave us the last minute information as of this morning, and that is the U.S. stock index futures are lower this morning after the S&P 500 closing at a new record high on Friday. The yield on the 10-year Treasury is stable at 1.6%, while the 30-year is holding at 2.3%. Oil prices are higher on expectations that OPEC group of producers will maintain the output levels and they're going to be unchanged. The shares of Boeing are higher after Southwest Airlines has announced that it will buy 100 of Boeing's 737 MAX jets. And that is the information so far. The year-to-date returns are S&P 500 is a plus 6.1%. Dow Jones is a plus 8.5%. And the NASDAQ is a plus 2.1%, all holding very, very well. Stay with us. We'll be right back. We're going to be talking about a program called Your Money. Paul usually has an excellent topic about that. Stay with us. We'll see you in a little bit. Thank you for staying with us. We are back with Your Money. Paul is going to take it from here with an excellent topic. Paul, take it away.
Okay, for the second half of the show, I wanted to bring a topic to the viewers that I oftentimes get asked. And it has to do with, should I convert my traditional IRA to a Roth IRA to eventually avoid some taxes at distribution time? So I've got some general guidelines to think about if you're contemplating this move. So let's dive into it. Roth IRAs, they're generally considered among the most attractive retirement savings vehicles available to individual investors. They offer the unique potential to grow investment earnings without incurring any income tax liability if qualifying distributions are made. Now, it's important to note that how much you can contribute to a Roth IRA depends on your tax filing status and modified adjusted gross income. For a single filer last year in 2020, your income must be under $139,000 or $206,000 if you're filing jointly in order to contribute. Beyond making regular contributions to a Roth IRA, the other way to take advantage of this savings tool is to move money from a traditional IRA or a workplace savings plan to a Roth IRA. These are referred to as Roth Ira Conversions. And now may be an opportune time to give this idea a closer look. So let's go over a few things in detail you should know. Number one, it is a taxable transaction. The key factor affecting the decision to pursue a Roth IRA conversion is the tax impact. Remember that some or all of the distributions from traditional IRAs are taxed at ordinary income tax rates. If contributions were made on a pre-tax or tax-deductible basis, the entire amount of the withdrawal is subject to tax. If after-tax contributions funded a traditional IRA, only the portion of the contribution attributable to investment earnings is taxable. With a Roth IRA, all contributions occur on an after-tax basis. So if holding period requirements are met, all distributions can be received on a tax-free basis. Moving money from a traditional IRA to a Roth IRA is a taxable event at the time of the conversion. Consider an example of converting a portion of a traditional IRA to a Roth IRA. If all contributions to the traditional IRA were made on a pre-tax basis, the entire value of the converted amount is added to your ordinary income for the year and subject to tax at applicable rates. You want to think about making smart tax conversion decisions. So let's take an example. If we assume this conversion totaled $100,000 and an ordinary income tax rate of 24% applies to the converted amount, that results in a tax liability of approximately $24,000. It is often recommended that you pay the tax due from available resources in existing taxable accounts. This allows the entire amount converted to be shifted to the Roth IRA, maximizing the long-term tax benefits of the conversion. You do not have to convert all of your IRA assets at one time. It can occur over a series of years to spread out the tax impact. Remember that income is taxed on a progressive scale across a range of tax buckets. You may want to convert an amount that will stay within your current tax bracket. So for example, a married couple expecting a taxable income of $100,000, again for last year's numbers, will be in the 22% federal income tax bracket. Now that bracket for married filing jointly continues to apply to a taxable income up to $171,050. Therefore, they can convert, in this example, an additional $71,050 without any of the converted amount slipping them into a higher tax bracket. Last thing to consider is the timing may be right. So another consideration relates to the future of tax rates in America. Current income tax rates are near the lowest levels in recent history. There is concern that due to skyrocketing federal debt, much of it spurred on by stimulus-related legislation relating to the COVID-19 pandemic, tax rates may rise in the future. By taking the tax hit at this time, when you convert funds to a Roth IRA, you may ultimately pass less tax on your IRA than if you waited to take distributions later. That's assuming tax rates go higher. Roth conversions can be a very effective tool, both in terms of tax management and in helping generate greater after-tax cash flow in retirement. But the process can be complex. So as I always say, be sure to consult with your financial advisor and your tax advisor for more guidance and before taking any action. That's going to sum it up for today, Ron. This is a topic that I often do get asked about, so hopefully I was able to help some people out at home with some general thoughts on doing a Roth conversion. Again, I can't stress it enough, because we talked about taxes. Please consult with your tax advisor before taking any action, because at Ameriprise and our affiliates, we do not offer tax or legal advice, and we do recommend consumers consult with their tax advisor or attorney regarding their situation. However, if you have a financial investment type question, that I absolutely can help you with. So if you are working with an advisor already, that's great. But if you're considering a second opinion, or if you're not working with someone and you're looking for some advice, feel free to give me a call directly, and I can be reached at 708-226-3412. That's going to do it for me for this week, Ron. I'll send it back over to you, and I will be back next week with 2 new topics. Hope everyone has a great week.
And thank you again, Paul, for that interesting topic. For Paul Munichel with Ameriprise Financial, myself, Ron Jankowski with Channel 4, we both wish you good investment day.